Hi there friends, good week, how are you today? This is the first weekly review for June 2012 and we have many interesting things that happened during the previous week. Well, while all the world focused on European crash and all expected the pairs and the markets to keep crashing all the way down, something special happened on Friday, and that's the non-farm payrolls in USA. The numbers are terrible. US market, this is the second month in a row that the expectations were much higher than the actually result, which means that the job market, despite the QE number 1, despite the QE number 2, did not really successfully survived, and it looks like more and more people again lose their jobs, and less people again find new jobs. We have to remember that, as that's probably the main key or the next potential trigger for Bernanke to come with QE number 3. If and when it happens, we will see the market going back to a bullish environment and the US dollar crash again. So the opportunities for the upcoming week, we have several, so let's not waste time and let's take a look about the things we have. Let's start with the dollar Canadian, which from my point of view is one of the best opportunities for the upcoming days. Let's start with the weekly chart. Weekly chart, we can see we have band to band move. We have a resistance around 104.50, 104.60, that's the range, maybe a little bit even higher around 104.80. Okay? We have clear range of resistance there. We also have overbought already on the stochastic, which is nothing as itself alone, but together with other things, it does has important meaning. Then we are going for daily chart. On daily chart, we can see the prices moving almost straight, right? We have more than 600 straight pips move. Last time it happened was here, but then we get 800, and then how it reacted. The main thing is the divergence started to being built. Is that the end? Well, from my point of view, it definitely comes to its end. First of all, it is closing the gap. It looks like it's going to close the gap it had since November, end of November 2011, as you can see here. Right? It can even go and make it a little bit higher on previous high. As we can see, it used to be a clear range from this area through this area and this resistance, right? And this resistances all the way. So it definitely is a range. We can see RSI is aiming 20 as well, and we have double Bollinger Bands duplication coming to this area. From my point of view, this is the end of the party for the dollar Canadian, at least for this period. I expect it from this area to go at least as to the 20 MA of the daily chart, but then who knows, maybe much deeper, all the way back to 102 or even lower, So from my point of view, attacking these areas is a good thing to do. Of course, if the daily chart closes above it and holds above it, that's our get out signal. We will not fight this area anymore, but as long as it holds this divergence, the potential extreme and the resistance and the double Bollinger Bands duplication area. From my point of view, that's a sell call. Now this is the first pair from my point of view that should be watched for good sell for this week. Let's move forward. Europe, with all its issues, right? With all its issues, euro dollar provided for us almost 20 candles right down. The only problem is that we have here a morning star candle pattern, which when it comes with divergences is not classical pattern for retraces. Even though because of that, let's start from longer time frames. Pay attention for a serious thing that happened on the monthly chart. The prices closed below 126 and even below 125. From my point of view, if on the next month, at the end of June, the Europe does not close above 126 again, it will open the doors for this pair to crash all the way back to 118 and then probably even to 110, and then probably even to 110. The next month, June, is going to be critical based to monthly chart. Go back to weekly. What do we have on weekly? On weekly we have prices going out of Bollinger Band. Bollinger Band's duplication in our area can bring us back to 118 as we just discussed. Right? We can see that this resistance area, this 126, famous 126, also was closed below, which is logical because monthly closed below, so weekly also closed below. Going for daily chart, what do we have on daily? We have a bullish divergence. We have an extreme RSI divergence around 20. We have a stochastic divergence, and we have a continuing divergence of the last three lows of the histogram. Last three lows at the histogram. This situation reminds me exactly 2011 drop down during September. Remember here, these three lows? For me, it looks almost the same. That's why the expectation that the euro can push higher. The only difference is that on this case, the weekly chart, right, did not break through the last support, which the euro does this time. So I do expect the euro dollar to make corrections. I do expect to go for this famous 126 area, or at least for the daily 20 MA. But then we have to be very careful because it can push higher. It can push higher trying to break through, right? And if there will be any help program somewhere worldwide, from US, from China, maybe from Europe, again, then it might happen. But as for now, I am long. I think long on the euro dollar, right? With very cautious protections, target, 20 MA and the 126 area, with protections below the last low. That's from my point of view what we will get from the euro. Then we will wait and see how it acts. As for now, that's from my point of view direction. With that, euro pound could be also wonderful opportunity. After a long drop down and weekly divergence that has been built, it looks like the euro pound could continue higher. But let's pay attention for the daily chart. Daily chart has a stiff resistance here, right, around this gap area. RSI seems to try to break through the 50, which should give the bullish momentum. We can go as low as for the 4-hour chart, and we can see that after this bullish divergence that we have had, then prices are aiming up. Prices are going up. And from the last two highs, from this high to this high, we have a clear convergence, which means every retrace down should be considered as a buy opportunity for the euro pound. And based to the resistances, from my point of view, the euro pound has to go all the way back to around 081, 40, 30, that's the area, before any new direction could be decided. So every retrace down by 25 till 40 pips should be considered as buy opportunity. Pay attention, friends, that from my point of view, the last area to hold the euro pound for continuation higher should be 08030. If the pair for some reasons closes below this 08030 again, get out from this pair. We do not want to be there. Until it happens, I am bullish for the euro pound. Every retrace 25 to 40 pips should be considered as buy opportunity with protection below this support. That's, from my point of view, a wonderful potential trade. Now let's take a look on some yen pairs. Dollar yen acted completely crazy after the last news released. But taking a look on the daily chart, we can see that dollar yen has a very, very, very stiff supportive area, right? A lot of support around. We have a long divergence for the dollar yen, but some of the indicators still has bearish potential move. And dollar yen just went below 200 moving average again. So with that we understand dollar yen could go lower, but it looks like coming to its end, right? And the range of the support not too big. With that, let's take a look on some opportunities. Euro yen, long divergence, RSI extreme, 20 candles right down, which means euro yen is coming to its bottom, would create a bottom here soon and make probably retrace all the way up to 99 area plus at least, then maybe even all the way back to 101. So from my point of view, euro yen is one of the beautiful buy opportunities. We can go as low as for the 4-hour charts. Every down move again should be, from my point of view, now considered as nice buy opportunity, at least to the 99 plus, as we just discussed, maybe even higher. I am bullish for euro yen. Aussie yen, same story, with closing a beautiful spike. I would not say it's classical hammer, but it definitely reminds a hammer on a support area, right around the 75. Should hint us, and hints us actually, that the pair is ready for the retrace. Aussie yen, from my point of view, is going to retest this trend line, which means from now, or from visiting again on this support, on a low end support, it has to push up again. 78 plus would be the first target, but then it might go all the way up again, higher, all the way back to 80 plus area, to the 200 moving average. We are coming to buy opportunities for Aussie yen. Kiwi yen, exactly same story. Pay attention for this extreme, beautifully continuing divergence. Coming to the end, right? It should build itself. Maybe it will push a little bit lower again. It still has a room, especially with the stochastic. Do you see the stochastic, friends? How strong it aims down. So it might be not the end, but during the next days, it should stop itself and begin its correction back to 60-50, maybe even higher as target number 1, then breaking above this one, and we are going all the way up to 62 again. From my point of view, New Zealandian yen also will go and reach this long trend line as it has. I am bullish for this pair as well. What about commodities? Take a look on the commodities, friends. Right? Sorry, that's indices. We will see them in a minute. Gold kicked crazy to the close. From my point of view, it's bullish sign. If the gold goes up again above this trend line, we are going bullish. We are going bullish. If you want to act aggressive, go for 4-hour charts, right? Look for every, we have a stiff resistance right now. Look for every retrace for the 4-hour chart, right? Like to this support, for example, to this support area, for example. Every retrace here for 4-hour charts, you can go aggressive, buy, and then look for breaking through the trend line. From my point of view, gold has to go and will go all the way back to at least weekly 20 MA, which means it has a room to go. And who knows, maybe it's a beginning of the next long up move. Silver, same story, right? Silver, same story. On the daily chart, you can see it's trying to create the range. If it breaks through the range, that might be our call for a buy. But gold is a gold, and it's more recommended than silver these days. We have to be careful with the silver for the weekly chart, as we have here, as you can see, triple doji. If it breaks down through this doji, it opens the doors for the silver to go down all the way to 25 again, and who knows, maybe all the way to 20 again on the long range, on the long term. But breaking above the range and holding above will change this story and aiming the silver for long up move again. This is it for the commodities. Another good commodity opportunity coming from the oil. The oil, from my point of view, also you can see it's acting on very extreme RSI, as we can see. Daily chart acting very extreme. Oil is coming to the end. Oil down move is coming to the end very soon. From my point of view, we are coming very soon to extreme low with a 20 candles ride, right? And soon it will stop and make all the way retrace for big amount of pips. So I become very bullish for this one as well with this extreme situation. What about indices? Well, indices. Take a look here, friends. Right? Nasdaq is going to test this support. We discussed about it many times. But what next? If there will be QE number 3, moving up. If not, I'm afraid that this is the beginning of this monthly chart, monster divergence that we have, to start its long down move. But as I said, the S&P as well, you can see that. As I said, QE number 3 will decide for us. Is that the end or not? If nothing will come from as help program, nothing will stop the market. Nothing will stop the market. And I even don't think this is the end. With this kind of view of the indices, it's very bearish. And every correction up should be considered as down. 2400 is the first target for the Nasdaq. For S&P, we already reached the 200 moving average. Now breaking below this support around 1260, 65. If it breaks through, it opened the doors all the way to 12.15, and it might be just the beginning. It might be just the beginning. It does not look good for the indices. If there will be no help program, I am very, very, very bearish. And just to finish with some another exotic opportunities, dollar. I think the dollar is coming to its end, friends. I think the US dollar comes to its end. Dollar forint, for example, you can see this extreme. We can take a look on dollar against the Czech kron. We can see dollar against the rand, South African rand. Dollar against the Turkish, as you can see. See that? We are bearish here, friends. We are bearish here. Very bearish. And from my point of view, dollar is coming to its end, at least for the next period. This is all, friend. Thank you very much for watching this video. I wish you a wonderful week, and I see you, of course, in the live room. Thank you very much for watching this video. Bye bye.